Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, October 7th. Well, my friends, we have some very interesting market developments this week. We've seen the Bank of Japan decide that it needs to print money to try and rescue its economy. This is almost unprecedented for Japan, a very conservative central bank. And that comes on top of the United States Federal Reserve, Chairman Ben Bernanke, deciding, quite some time ago, a month or so ago, that he will print as much money, as much U.S. dollars as needed to rescue the U.S. economy. So we now have what amounts to two of the most powerful central banks in the world engaging in a printing madness to print fiat currency and try and stem their economies from turning south again. Now, it seems like almost everything I've been forecasting for you has come true in spades. And in a few minutes, just a minute or so, I'm going to go directly to the charts because we're seeing some incredible market action. But please do stay tuned for this entire video because my colleague, Rudy Martin, I'm going to ask him a question towards the end of this video that I think you'll find very intriguing and that's very important for today's global marketplace. So with that, let me go right to the chart on gold. As you all know by now, I have been forecasting a continued move up in gold, and this week we got gold breaking through upside resistance quite dramatically. You can see it here on the charts here. Gold is going vertical. It has broken out through all of my chart resistance. It is following the cycles higher. There is no further resistance in the gold market till we get up to about $13.95 or $1,400 and perhaps even $14.10 on this continued rally. There might be 1 or 2 day pullbacks, but I believe that we'll probably get at least to $13.80 and probably to the $14.05 level. What's driving it? Well, two things. Number one, global printing of money. As I just said, we're seeing the Bank of Japan deciding to print Japanese yen like crazy to rescue their economy, and we know that Ben Bernanke at the Federal Reserve will do the same. Meanwhile, the euro, which is rallying a bit against those two currencies, has its own problems, and when push comes to shove, I'm certain that the ECB, the European Central Bank, will also engage in various strategies to try and weaken its currency. The second reason we're seeing gold soaring is because all over the world, savvy investors really don't have any confidence in government or central banks to turn their economies around, and they don't have confidence in fiat currencies. So gold is acting as it always has over 5,000 years of history as a fantastic store of wealth, and it really as the only true real currency in the world. Let's now go right to the dollar so you can see how dramatic the decline has been in the dollar. I'll pull this chart up for you. You can see that beginning in last June when the dollar peaked, we have now fallen over 20% in just a little over 2 months. Let me make this chart a little clearer for you. There we go. Look at this dramatic slide in the dollar. Beginning again in early June, we fell quite dramatically in the dollar index from 89 and change down to about 80 and change, and bounced a little bit up to about 84, and have now plummeted again, breaking through key support levels here at the 78 level. The next stop for the dollar index will be down at around 76.5, 77, where I do expect it to bounce a little bit simply because it's a little bit oversold on the short term. But make no mistake about it, the long-term decline in the value, in the purchasing power of the U.S. dollar is down, 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 down. Now let's take a look also at the Dow Industrials. You'll recall in my last few videos I've been warning that the Dow could easily test 11,000, and lo and behold, here we are just about at 11,000. There's a little bit of resistance at 11 and 11,187. I do believe the Dow will find it very difficult to get through that level and should begin turning south for a quite a sharp sell-off going into the latter part of October and into November, possibly even to December. But this short-term strength in the Dow should not be ignored. It should not be considered some kind of freak situation where speculators are going mad. It is a subtle sign that in the long term, as currencies depreciate, of course led by the US dollar, but also other currencies as well, select blue chip stocks will begin to take on the attribute of a currency hedge. I've been maintaining that all along, and it is quite possible that we could see in a few years from now new record highs in the Dow. Now, keep in mind that this currency game that's going on with countries around the world trying to reduce the value of their currencies in order to inflate away their debt problems and to gain an export competitive edge against other countries is a major monetary crisis. You have the euro, which has a sovereign debt crisis, and although the euro is strong now, I have no doubt the euro will start to fall apart again. We have the dollar, the Federal Reserve, printing money like crazy, and now we have the Bank of Japan. Well, you've got the yen weak. You've got the euro full of problems. You've got the dollar sliding downwards. Really, the only other two major currencies in the world that are at least somewhat holding their value are the Chinese yuan, backed by $2.4 trillion in reserves, and another very interesting situation pretty much right in our own backyard, and that's Latin America. So I'm going to hand this off right now to my colleague Rudy, who's going to explain to you what's happening in Latin America, led by Brazil, and how the Brazilian real and other currencies in Latin America are indeed appreciating against the dollar. And interestingly, I mean, you all know how keen I am on Asia. I am also very keen on Latin America. And Rudy continues to point out several things to me that are looking like golden profit opportunities there. Rudy, please explain to our audience what you see happening in Latin America.
Yes, Larry, we're living through another history-making global currency crisis, something you've been forecasting for years. The thing is, while most of the world is focusing on the deteriorating developed economies like the United States and Europe, and how they're currency printing themselves into poverty, there's another side to this. There are two regions of the world that are not only growing, but where currencies are largely appreciating, not depreciating. Now, one of them your readers already know well, China and Southeast Asia. That corner of the globe is experiencing explosive economic growth, and virtually all Asian currencies are rising in value against the US dollar and euro-based assets. Even the controlled Chinese yuan is going to have to go up in value, and soon. But there's also Latin America and its largest economy, Brazil. Look, you and your readers know all about Asia and the soaring demand those countries are placing on natural resources. And your readers also know about how the falling dollar is positively impacting the price of commodities, especially gold and oil. But we also have to take a look at the countries that are supplying natural resources to Asia and the rest of the world. For my money, I'm betting on the countries that are raking it in from the supply side, especially Brazil. In addition, like China, Brazil has enormous cash reserves these days, over $277 billion, and hardly any foreign debt to speak of, only about $60 billion. So Brazil's balance sheet is looking great. Brazil also has a young, increasingly productive workforce with rising personal incomes. So the country's demographics support a solidly growing economy. And investors are finally focusing on Brazil's offshore oil discoveries and renewable energy sources. Those are putting the country well along the path to becoming an energy superpower. In September, Petrobras raised about $70 billion in the world's largest stock offering to fund oil exploration and development. Now, China recently invested $10 billion in Petrobras in exchange for oil. And Sinopec, one of China's biggest oil and gas producers, It's buying a 40% stake in Repsol's Brazilian operations. The deal would create one of Latin America's largest private energy companies, valued at $17.8 billion. So as you can see, with all these deals, money, and I mean big money, is now rushing into Brazil and other Latin American countries left and right. So the bottom line is this: while the United States, Europe, and even Japan, as you noted, are looking terrible, while their currencies are suffering from the mad money printing that's going on at their central banks, Southeast Asia and Latin America are looking much better every day. And it's in Latin America where investors are missing out on huge profit opportunities. Right now, for instance, I have about 21 select Latin American investments on my daily radar screen. These are no-brainers for anyone who truly wants to grow their wealth. In the next few weeks, I expect to narrow these 21 down to 7 select investments that I'm going to put a buy record on. So as soon as I finish my work, I'll give you and your readers a heads up on them. You won't want to miss them. In the meantime, I agree with you, Larry. We can expect the US dollar, the euro, and the Japanese yen to continue to lose purchasing power. And on the other side, natural resources continue to boom because of those currency devaluations. Investors should focus on the 2 regions of the world that are benefiting from that trend: Southeast Asia and Latin America. Thanks for watching, and happy trading.